Welcome to this very special edition of my quarterly real estate market update for Santa Clara County. And although the next one isn't supposed to come out until June, we've got obviously some special circumstances right now that demand a timely update. So you guys know, Shannon here, as always. My number one goal is to educate you in a whirlwind that is the Silicon Valley housing market. So let's just start with, wow. And there sure is a lot of volatility going on out there, and the news headlines are such a driving factor of consumer confidence right now. So let's dive into how this affects the local real estate market, which is my duty to provide to you. So yes, news headlines are driving consumer confidence right now. And although the underlying stats promote a healthy housing market, the trade war and conflicts and the stock market's reaction have people staying on the sidelines. So inventory continues to rise slowly while pending sales lessen, but they stay consistent. This is true across all platforms, single-family homes, townhomes, and condos. So the question is, are we in a market change pattern, or is this just like a pause button on the market? Let's talk data, and I'll share my insights with you. For this update, I'm gonna combine all inventory, so single-family, townhome, and condo. So homes for sale as of April 20th are 2,204 overall homes on the market. This is up slightly from last week, which was 2,144, and thankfully higher than that historically low and unhealthy 1,433 homes available at the same time last year. So pending sales, there's 962 pending. That's down 4% from 1,002 last week and 1,073 at this time last year, though very consistent over the last 4 weeks despite the economic volatility. Next, we're talking about absorption rate, which measures the percentage of inventory that is selling. It's currently down to 43.6%, but there's a large discrepancy as single-family homes are at 51% and townhomes and condos are just at 32 to 33%. This is down from last month when it was 52.7 and down from the dominant sellers market of 75% at this time last year. This does signal a much more balanced and quite honestly healthy market amongst single-family homes compared to the very inventory-constrained conditions we saw in 2024 and 23. However, the condo and townhome market currently can be classified as almost a buyer's market. So average days to sell. While we don't have the anticipated April data as of yet for the days on market, homes this year have been moving rather quickly with an average of just 13 days on the market in March compared to 15 days just a year ago, and also faster than the 24 days that we saw 2 years ago. Next, the average home price in Santa Clara County was $2.592 million in March, reflecting a sharp 16% appreciation compared to $2.229 million in January. And the average price per square foot has risen to $1,306 per square foot, up 21% from just November of 2022. Keep in mind that price per square foot often varies depending on the home size. Larger homes tend to have a lower price per square foot due to economies of scale. So here's a quick recap. While inventory continues to rise as it always does seasonally at this time of year, despite the fear in the market, there is not a rush of panicked sellers bringing their homes to the market at once. Pending sales, although they have not spiked as typical during this time of year, they've remained steady and healthy. Homes are still selling quickly with an average days on market remaining low. However, I would expect to see an increase in that statistic when those April numbers come out. Price appreciation in Silicon Valley continues to be a real thing. What will those April numbers bring in this category? I expect we'll lose some of that appreciation, but still be above the January and year-over-year numbers. The absorption rate has stabilized compared to last year's frenzied pace, but it still does reflect a healthy market for single-family homes, although the focus has shifted to the buyer's favor in condos and townhomes. The spring real estate market in Santa Clara County has officially had that pause button pressed. Let me clarify what this means. First of all, let me be clear, we are not at the precipice of a housing crash, but I'm sure you can find plenty of clickbaiters out there that are itching to tell you different, as they have been for the past 10 years. Understand this basic equation. It will take volume to move the market negatively. Our current inventory is still at all-time lows with just over 2,000 homes on the market, which pales in comparison to the 16,000 homes that we had on the market in the 2008 and 2010 crisis. That was volume. And here is why we will not get volume. Back in 2008, homeowners had negative equity, adjustable rate mortgages that were maturing, and it was a truly bad scene. But now the vast majority of homeowners have interest rates below 4%, and home equity per homeowner is at an all-time high. Sellers are not in panic mode, With market conditions unfavorable, they're simply going to hold on to their home, securing no unnecessary spike to inventory that currently is still hovering not so far removed from that all-time low. This also means prices are going to hold steady. However, there is an exception. Some owners price their homes intentionally low to get multiple offers. I know you guys have seen it. And with a good amount of buyers waiting on the sideline right now, meaning less competitors, they might just get their asking price, watching that strategy actually backfire and selling for lower than what they could have if they priced transparently. When we see this type of shift, you get some false appreciation, which means that homes might not sell in April what they sold for in March or February, but the general appreciation trend will stay positive year over year. For home buyers, this is opportunity, like what you've been waiting for the past couple of years. Take it from me, don't sit on the sidelines waiting for the crash, because in the meantime, when some good news hits the headlines, the market is most likely going to unpause and the buyers waiting on the sidelines are gonna jump back in, causing another spike in appreciation. Can anybody remember the pandemic pause and the madness that ensued afterwards? Don't be surprised if this is actually a light version of that. Imagine that feeling when you own a home and you hit the jackpot eventually, refinance to a lower rate, and you've got appreciating equity in your home. And more importantly, imagine what waiting and that sinking feeling feels like when that actually occurs and you didn't get a home during opportunity time. A little insight based on my research, investors are buying at a 20% higher absorption rate than the typical home buyer. What do they know that the average buyer doesn't? They're buying right now. So if you are in a position that you have to sell your home, don't panic. There really is no need to. Make sure your home shines above the competition, and remember the overall sales numbers are still strong. I'm happy to share how my strategies still work in this market. Just reach out to me privately in the comments below. And don't be surprised if the second quarter activity moves to the third quarter this year. We've seen it before in the Valley when we've had that pause button pressed. I hope this helps with the perceived craziness right now, and although I understand it's not easy to digest in just a few minutes, go ahead and watch it again. Reach out to me if you need any clarification. And due to the confusion in the market right now, I will have another market update for you next month. Also, don't miss our Sellers Workshop coming up on May 10th. We're also gonna go into depth on all things real estate. And of course, if you need a one-on-one conversation on how all of this affects your personal goals, I'm always here for you. I will see you guys next week.